You can't replace economic growth with fiat currency. It just doesn't work. You came here for the truth. Today, we're going to get into some huge news. The first thing is the unemployment situation that continues to escalate. The second thing I want to look at is, of course, my favorite and yours, the Federal Reserve. Some new information that they released that I wanted to bring to you. Have you heard this anywhere else? Well, let's see. We'll talk about that later. And the third thing we need to look at is, of course, feudalism. If you see what's happening today with the big corporations buying anything and everything, what does that leave for you? All these details and more. Let's go. Okay, so check this out. I'm sure you already knew this, but this is now coming out in the news. I wanted to bring it to you once again. 26 states ended federal unemployment benefits early, but the second part of that is that data suggests it's not getting people to go back to work. So this was the interpretation of the current data. I wanted to know your thoughts. We're going to talk more about the job situation right now, but I wanted to know your thoughts. Right now, we've got a lot of people in the United States that are relying on this extra source of income to pay the bills. That's not coming through. What's going to happen as a result? I'm not so sure, but certainly more stimulus could be coming around the corner. Now, in this current trading session, you could see, of course, that the Dow Jones fell 300 points. And if I look over here, it's actually 323. And that just gives you a little bit of insight as to how fragile the market is. The NASDAQ was up a little bit on the day, but certainly that big rally that we had seen hasn't really been there since the stock market dipped down to the moving averages, which we'll show you in a second. But of course, this is where we are at today. I'm showing you that, it's related to the jobs, and yeah, we get that. But there's more to it than that. US companies add far fewer jobs than forecast. And they were claiming that, they were going to get to 690,000, and it was half of that number. This comes directly from ADP's website. You could see the National Employment Report. If I zoom in, 330,000 jobs. Not so good, not so good. Let's take a look at a few charts here. This is the PMIs, the non-manufacturing PMIs, looking quite positive. That's always good. You want to see those numbers. Anything above 50 is looking good. It's in growing mode, and that was at approximately 65. United States ADP employment change, you could see how it peaked out. So we came from a very low number here. Over the last several months, it had been increasing, but now 3 months in a row, these numbers are declining. We're going to keep an eye on that and see if it does go in the negative once again and sort of follows in that same pattern from the year before. Look at the United States Services PMI. This is still in positive territory. It's at about 60, but it is declining. So we'll see if that trend continues as well. All of these put together make a difference. They make a difference when you see actually how it impacts different stocks, because yes, you're seeing a PMI indicator and it may not mean anything in itself, but it starts to add up in different stocks, in different companies out there that are really being affected by all of this. It's just one way of looking at the data. Now we're going to talk about the Federal Reserve because, in my opinion, this is huge. Did you hear about this anywhere else? Key Fed official sees rates lift off in 2023 as policy debate heats up. Wait a second. This is a quote from Federal Reserve Vice Chair Richard Clarida, and I quote, "Commencing policy normalization in 2023 would, under these conditions, be entirely consistent with our new flexible average inflation target framework." He goes on to say, there's another quote down here, if I could find it, Clarida added that he could certainly see the Fed announcing a reduction in its $120 billion a month asset purchase program later this year. Two big pieces of information right there. At the end of this year, like I have been telling you, in September, they may announce what they'll do at a future date, or the possibility of a future date, that date likely being in December, assuming everything's moving in that direction. Now, they're going to drop that probably by the smallest amount they can and say, we're being slow with it, and probably start with the mortgage-backed securities, and knowing that they don't need to be in the mortgage-backed security game at all. And so they might start with that, or maybe a little bit of both on the treasuries and the mortgage-backed securities, and then they'll take it a step further later on at a different date in the new year, 2023. They'll come out and they'll start to increase interest rates. How far can they go? Not far at all. Now, this is all really dependent on what happens with inflation. Let's look at this right here. Yellen sees inflation in line with the Fed's goal by the end of the year. That's right. We'll never see another crisis in our lifetimes, Janet Yellen. And she's saying that, don't worry, everything's going to be okay. Why? Because their whole model now is that we can allow inflation to run really, really, really hot because it's been so low for so many years. Is that really wise? Is that really good to destroy the purchasing power of your currency? I'm not so sure. Let's be clear about this. Number one, the markets have not priced in a rate increase or, the printing money reduction or a problem with jobs and unemployment whatsoever. It's all priced to perfection. Number two, yet the Federal Reserve has acknowledged the fact that they will absolutely be tapering at some point in the future. Number three, we must acknowledge that economic growth is directly tied and directly reliant on stimulus. That stimulus right now has been pumped out, and we see this, this real cycle that takes place, and it's never a good thing because stimulus is not infinite. So let's talk about this here. Apartment rents post record gain as tenants flood the US market. Very interesting. The largest ever rent increases. Big time right now. There had been a big change over the last year and a half, but it looks like apartment rents are skyrocketing. And I have heard from you that you have seen this yourself. If you want to join in the comments, put down what you're seeing, an increase in rents, what's happening, what your landlord is doing, and so on. Now, I tend to talk about this and people say, the landlord's bad, landlords are bad, the landlords are bad. But I want you to know about something that, quite frankly, is much worse. I'll refresh the page and you could see this. Meet your new feudal overlords. While billionaires, now it's crashing on me during the video. Let's do it again. Billionaires are buying up all of the nation's farmlands. What about this? Blackstone bet $6 billion on buying and renting homes. You see what's happening is that the small landlords can't withstand this period of time of a year and a half of no rent. So they sell it off. And then you've got Blackstone. And then you've got all of these different big establishments buying up all these homes. And they're going to jack up the rents. And people, if they want to live somewhere, they're going to have to pay it. Because the big companies, they can skirt around any of the rules. They can also withstand the period of time of no income. They don't feel bad about booting somebody out. All of these things are coming. This sounds a lot like feudalism if you look at it at a deeper level. Look, Blackstone's just one company. But you look at it, how this is going on in sort of the grand scheme of things, and it really looks like this is the case. Connected in with the jobs issue we talked about earlier, Chipotle is increasing menu prices to offset rising employee wages. That's what all these companies are doing. Costs increase, whether it's the raw materials. Hey, if avocados start increasing, that guac you put in your sandwich, guess what? It's going to cost a lot more money. And Chipotle is going to make that happen, right? Inventories at dealers fell from already historically low levels in July. You can see that right there. It is quite significant just to see how much of these inventories are just disappearing. And then I wanted to finish off with this. Goldman Sachs non-profitable technology index. Just look at the chart. I know it's blurry and so on, but these stocks have performed so well. The less profitable they are, somehow the better the stock performs. We are living in a topsy-turvy world, my friends. I just wanted you to see that. It's crazy, but I wanted to end it there. If you haven't already, we've got thousands and thousands of people into the Money GPS Insiders, and they are giving me great feedback because they get the email directly to their inbox. And this is a way to skirt around the restrictions and the shadow banning. And it's very simple. You sign up for free at this card right up here or at themoneygps.com. Hit that thumbs up button to support the channel, to notify the algorithm that this is something very interesting to you. And if you haven't seen this video already, you definitely got to check it out. Click it, and I'll see you there.